Legends, hope you're well. Legends, it's an early stream today. I know I'm about an hour and a half early to when we usually go, but it is Christmas Eve down under here. It's probably late going into the UK, and it's still the eve of Christmas Eve in probably for most parts of the world. So I hope you're well. I wanted to do just a quick stream because it is Christmas Eve here, and just give you guys a quick pulse update on the markets and let you know I won't be here for Christmas Day tomorrow. I've decided Faith and Family Day tomorrow. So yeah, I'm not going to do a stream tomorrow, but I also don't anticipate much in the markets except for chop and volatility. So on that note, better start with the disclaimer. Not financial advice. This is not financial advice. I'm not a financial advisor. This is just my view of the markets for educational purpose only. So, Legends, 24th of December, Christmas Eve. So, the theme remains, okay, where I've said over the last few streams, this week, next week, and likely the first week of January, we're running on usually low volume, thin liquidity going into the end of the year. Most funds and desks are closed. There's typically no big strategic positioning happening here. So we just cannot get trapped or confused by any moves that happen within this window, confusing them with strategic positioning or direction being set going into Q1 and 2026, okay? It's just low probability that at this time of the year, especially considering the current conditions of the market, that whatever move we have over the next 2 to 3 weeks is the directional bias being set going into Q1. Okay, so I have that at low probability. So how do I treat that and how do I approach that? Well, to me, it's I'm not doing much trading over the next 2 to 3 weeks. Okay, I am mostly reviewing my year, planning for next year, and then from week 1 leading into week 2 of January, that's where I'm more eagerly looking at the markets for further directional biases and further insight into at least the first month, the first quarter, and potentially the bigger picture for 2026 when I look at my own books and what I'm planning to do and where I see the markets going. So hence, let's just keep that in mind. Let's not get trapped over Christmas. Let's not create any Grinch-like moments going into Christmas Day and Boxing Day and the New Year. It's a choppy environment, and the context right now doesn't suggest anything but, really. Overnight, we had GDP come in as a surprise beat. A prelim GDP, 4.3%. Forecasts were 3.3%. That's a pretty decent beat, right? Let's have a quick look at... look at that. That's the highest GDP quarter over quarter since back here November 2023, right? So hence we've had some mixed response in the market, right? Because the big consideration is, what does this do for the trajectory of liquidity and how the Fed is going to behave? And speculation aside, regardless of what I think, what the market is telling us from initial response is that they think it actually makes liquidity conditions tighter. That's what I'm seeing straight away, because we had the next cut expected in March, which is now pushed back to April again. And we had another cut expected in July of next year, which is now pushed back to September. Okay, so what does this suggest? To me, when I look at this, it doesn't paint a clear path to loosening liquidity. Okay, and it's a very volatile rate trajectory still, and the markets and participants don't like volatility in the trajectory of liquidity when it comes to taking on risk. Okay, what the markets typically like to know is that there's loosening, and the more aggressive the loosening is, the more of a bid that's going to go into risk markets, okay? So right now, we're still stuck in this high rate environment with no full-blown QE like we've seen in the past, okay? And this volatile trajectory doesn't give the market certainty that liquidity conditions are loosening. Now, if we actually look at this in the charts as well, a couple of charts I'll point out to you is that when I look at the 10-year, 2-year spread, okay, typically when this is trending up or moving up, it's good for risk assets because there's easing expectations, and when it declines, there's potentially recession concerns, or in general, it's not as conducive to a risk appetite bid as it's tightening conditions. And we had this spike down, right? We had this spike down overnight. And then when you look at the 2-year, we had a slight spike up. So, you know, we are still battling in this range down at the lows here. But typically when you see the 2-year poking up like this or trending up, that is not a sign that the market is expecting loose conditions. That's actually a sign that the market is expecting tighter liquidity conditions, okay? And we all know what that means. The tighter the liquidity, typically the more the risk assets sell off, okay? So the GDP read just throws, I guess, a bit more of chop into the mix. And at this point in time, the initial reaction that I'm seeing is potentially tighter liquidity conditions, which again is not conducive to risk markets going into a parabola or a price discovery. And that's been our running theme because Bitcoin has already turned over macro bearish, okay? The weekly structure is bearish. And what we're trying to navigate right now is there's potential room for a counter trend rally, and there's potential short-term fuel for it. There's a few signals that we're seeing where that suggests we should have some type of counter trend rally soon. However, the macro trend is still bearish. So if there is no counter trend rally at some point in time, possibly soon as well, we could see continuation to the downside, right? Now, on the net liquidity front, okay, so you legends know about our net liquidity indicator. I give this indicator away for free. Just DM me on X if you want this indicator. We know when the net liquidity is expanding, that's where we see bullish price action for crypto. We will get our next key data reads from the Fed that comes in weekly towards the back end of this week. So usually Friday, Saturday for me. It comes in sometime then. So we'll see if this trajectory is still ticking up slowly, because as long as it keeps ticking up slowly, it builds the case for some type of relief or counter trend, because we are in a chop range at the moment, right? We're in a very choppy range on the low time frames. And when you just zoom out to the daily on Bitcoin, we are in a daily range now, which we'll go and have a look at in a moment, but we'll do our quick round the grounds. But that's the pulse update, guys. So the key theme right now, and my message is, it's Christmas Eve, thin liquidity, thin books coming into year end. We don't have the context and the environment for especially a strategic directional rally leading, Q1, like leading into Q1 now. So just be careful if you're a bit of a crazy man and you plan to be trading over the next few days especially on the lower time frames, or if you're trying to position to prepare for Q1 and next year, just keep that in mind. Thin liquidity, year end. I doubt we'll see the true direction revealed until early to mid-Jan, okay? Now, if we just go around the grounds really quickly, just again analyzing markets based on some of that data we saw. I said yesterday the DXY coming down, looks like we're rejecting the FOMC level. This from here to here is where I was saying that is probably our play zone for a risk bid. Okay, now whether that risk bid flows into the risk we want on this channel, which is crypto, to fuel the counter trend rally or not, I can't tell you. I can say just from looking around the markets that the risk traditional markets, when we look at SPX, NDX, we look at the Mag 7, they had a bid on the back of the GDP read. Okay, but crypto, however, Bitcoin's down about 1% still. Stablecoin dominance is up. So I'm not seeing this bid come through. But you know what I am seeing? Gold. I'm sure we're all seeing that. Gold and commodities have been pretty parabolic, well, for some time. But we had this big consolidation that's breaking out on gold and silver. Geez, that's just a parabola through and through, right? So commodities... commodities typically more of a safe haven. They're not, I wouldn't call them a risk bid, even though they're trading somewhat like risk assets right now. But that just tells us, when we look at if there is some potential appetite, especially represented right now coming out of the DXY with the dollar weakening, where is that dollar going? Essentially, that's what we're constantly trying to track here, right? We're trying to say, okay, do we need to be in dollars? Do we need to be in X, Y, Z as allocators, as investors, as in traders, as it translate down the line to however you participate? And right now, when I look at the dollar and say, okay, so there is some sort of participation in moving out of the dollar, given that the Fed cut rates, the FOMC levels rejecting, and now the dollar's coming down, okay? And this general daily structure internal is down. Where's the money going? And we can see that it's going into commodities, okay? And we can see that there's still a risk bid into the traditional markets. But what I'm seeing here is, if you look at the RTY, after that spike, we're rejecting the FOMC level again, okay? And if you just remember what the RTY is, we're just looking at the spectrum of risk, right? Where you've got, call it the DJI, the SPX, the NDX, equities from the DJI out to the NDX is, if you just think of it kind of like that risk curve, is the start of the risk curve, I'd say. The RTY's a little bit further out, and then you think of crypto as right further out on the risk curve. So for me, what I'm seeing here, just based off that move off the after the GDP, seeing the DXY coming down, we're seeing that there's bid going into the early part, like the safer risk curve. But when it comes to further out on the curve, the RTY, well, overnight it's down 0.7%, and then crypto's still down. Bitcoin's already macro bearish. Well, it doesn't look like the risk appetite is broad risk on all the way out, okay? And again, when you've got broad risk on with a liquidity conducive environment, a loose liquidity environment, that's how you have bull markets, okay? This isn't bull market behavior right now. So that's what the markets are telling me right now. Nvidia, again, if we go back to our risk dashboard, and again, this is just what I explained, that how I can easily just see the risk curve where the NDX and the SPX are, call it the early risk or the safe risk, right? And then as we go up, Nvidia, RTY, and Bitcoin, that's going further out on the risk curve. So as we come into major tops or turns in the market, you should see this inverse effect from top to bottom, where Bitcoin will top first, RTY, Nvidia, then going into the NDX and SPX, right? So Bitcoin's already done its thing. And again, right now, Bitcoin and RTY didn't catch a bid off that GDP. Nvidia did, but again, it's still not I'm not seeing this as a steady risk on go hard signal right now, okay? Especially as it relates to crypto. Last thing we'll do, again, because I said we'll do just a quick stream, let's just look at stablecoin dominance, because we said yesterday's stream that our trigger for the counter trend rally, our earliest signal that would suggest the counter trend rally would be on the daily chart. If the bands, we're pushing below the bands, we're holding below the bands, and then the bands eventually turn red. You can see here, this was that rally from here to here, okay, which was, I'll just load it up on Bitcoin, new pane. That was our rally from April to August. Okay, now you would have done really well if you were just looking at these bands and taking profits through here, where we started to see this ranging, some band flipping, some interaction, and then closing out through here as we came into the major multi-cycle trend line. And as it confirmed and started trending up this way while Bitcoin's ranging, that should have been the major signal for you. And as it was for me to unwind all my macro positions, as I've explained in the past, right? But just from a trading perspective on the lower time frames, especially when you're trying to play this rotational environment slash if you're trying to trade the counter trend, okay, not the primary macro bearish trend, then this is that signal that you're looking for, where you want to see price below these daily bands, which will coincide with this range high, okay? And then you want to be monitoring how it interacts with the bands, because then when you get the inverse signal again, where price gets it back above the bands and the bands turn green again, okay, when they go from red and then they go green again, that should be your risk off signal again, okay? So hence, this is the main signal that we're tracking right now, okay? And on the higher time frame, we're still monitoring it on the weekly, because we know that it's already turned over and given the macro bearish signal, which is a bullish trend in stablecoin dominance, bullish green bands, and breaking out of the range. So we know that the continuation trade for Bitcoin is stablecoin dominance going up as Bitcoin comes down, right? That's our stablecoin dominance quick summary. And last but not least, Bitcoin. There's not really much to do or say here, legends. We know that we've got our major flip zone, okay? This is for our macro higher time frame, where you know, this might be the new weekly high and we might come down to this low, right? And maybe down for continuation here. This is the only area that I might be interested in a long at this point in time, okay? And that would be a counter trend long. If we come and sweep this low, I might look for a long just back up into the range high here. But we said the major flip zone is, that's where I was originally looking for a deeper pullback for the bigger macro short down to here and continuation. But, you know, we may not get that. This might be it, right? And in the short term, I was saying that the FOMC level is our barometer, okay? And see how it's rejecting? This is participants rejecting the Fed's gesture to come right out, like this far out on the risk curve, okay? Because if they were coming right out onto the risk curve, what I mean by that is coming all the way out into crypto, we should be trading above the FOMC level, because money became cheaper from this day, okay? So if that cheaper money is coming into crypto, then Bitcoin should be trading above this level. Trading below, and I said that's setting our short-term bias, where, okay, it could be likely that this is our new daily and weekly high, and as long as we're rejecting here, we may be coming down to take all these lows, maybe here. Legends, that's it for today's stream. You know, don't get chopped up during this next couple of days, and don't get trapped thinking that whatever move happens over the next 2 weeks is direction being set for Q1 and 2026, okay? That's the main message I leave you with. I hope that you have an amazing holiday season, Christmas Day tomorrow, and then New Year's. I won't be streaming tomorrow, just a reminder, legends. But I will be back Boxing Day. It'll be Boxing Day for me. It'll probably still be Christmas Day night for most of you legends. So I wish you all the best. I hope you have a really blessed day tomorrow, and I'll catch you on the next one. Please like, please subscribe. It helps me in the channel. Please follow me on X, and yeah, hope you have a good one. Thanks, legends.